All right, traders, within this lesson, we're going to be recapping the analysis and trades that were ended up being made today, and we're also going to be discussing some trading plans heading into next week. With that being said, let's get straight into the analysis. So in terms of my day, I started off with a $5,000 loss. I ended up buying puts when it was at 415.55. It went to 416. I added to my puts. It had a small drop. Then it broke above the high of day. As soon as it went above 416, I cut my loss when it was at 416.10, lost 5K. And that could have all been prevented if I just stuck to my analysis, because in terms of my analysis within the Discord chat, I made it very, very clear that in terms of this pattern and trend that I've been following, that I've been banking off for the past 3 days, I'm going to be looking for it to repeat again. The problem was that trend had no confirmation and no reason to repeat. I identified this bearish pattern. We were looking for it to repeat, but it gapped up. You know, if SPY gaps up and we're looking for a bearish gap down to do puts, then there's no reason to be doing puts if SPY is gapping up unless it cracks our key level and reacts super bearish, which it never did. So right here, I made it very, very clear. If SPY gaps up and reacts bullish, we will wait until, you know, the 418.70 gap to target puts. But with that being said, in terms of the mistakes that I made on that first trade was, first of all, it's gapping up, so the pattern's not repeating itself. In terms of this pattern, we spoke about it in yesterday's video. This was the pattern that I was looking at that I've been banking off for the past 3 days. You can see right here, it has this bearish daily candle, and then it fills the gap the next day, forms this pin, and then it has a massive gap up. Bearish daily candle, forms the pin at this gap, and then it has a massive gap up the next day. Same thing basically happened. And then if you look at the day after that, it ended up going below the previous closing price where puts would have banked. So if that pattern were to repeat itself for 4 days in a row, I was banking on all 3 of these days of it working. If it were to do it for 4 days in a row, then I would have been interested in puts. The problem was, for this pattern to repeat itself, it needed to gap down. It needed to gap down. It needed to turn the previous closing price into a resistance. And if you looked at the pre-market chart, not only was SPY gapping up in terms of the pre-market today, which means that that pattern and that trend is no longer repeating itself, but it actually turned the previous closing price into support. And then when it broke above the pre-market highs, it turned and bottomed at the pre-market resistance and at the pre-market highs, and then it shot right back up. That's why I cut puts as soon as this went to like 416.10 and retested these highs. I got out because it's bullish. It's gapping up. It's turning the previous closing price into support. It's breaking above the pre-market highs, and it's forming higher support and shooting right back up. That's why I cut my loss, man. So that's when it really hit me, and that's when I really realized that, you know, I have to wait for the best levels. So from there, I told people, you need to wait for 2 levels if you want to do puts. You need to wait for 418.79, and you also need to wait for 420. Those were our zones for puts. I ended up doing puts several times in that zone, and I ended up making $10,000 in total out of all the scalps, man. I did very, very well scalping. And some could say in terms of scalping against the trend, my argument would be, you know, 420 and 420.80 is weekly highs with massive downside potential. I don't think that's going against the trend. I think I'm going with the trend if I'm targeting puts at 419 and 420 if there's bearish confirmations. But the main mistake that I made today was going against my analysis. So what you have to understand is I'm going to be identifying patterns and trends, and you have to confirm that those patterns and trends are going to repeat itself. So what are some confirmations that this 3-day trend that I've been capturing, it was even more than 3 days with this doji, but what were some confirmations that history is not going to repeat itself and it's not going to drop? What were some confirmations? Well, SPY's gapping up. It was supposed to gap down. So the trend's changing, the pattern's changing, it's no longer working. And that was determined in pre-market. What's another confirmation if I wanted to try puts, right? If I wanted to try puts, what would be another confirmation to just get out, sit on the sidelines? Well, if it's going to turn the previous closing price into support in the pre-market and gap up, that's bullish. No reason for puts or the pattern to repeat itself, no confirmation. If it's going to break above the pre-market highs and then bottom towards pre-market resistance and go for new highs, get out of puts. There's no reason for puts. That's why I cut it. And then I told people, wait for it to fill the gap at 418.78. And the best level is 420. And some could say, well, you're scalping against the trend if you try puts at 420 to 419. And my argument would be, you know, it's weekly highs. It's weekly highs with major resistance. I don't think I would consider that scalping against the trend if there's a bearish confirmation. So those were mistakes that I ended up making today. I'm going to be recapping the wins. After that, it was just all straight wins, man. It was nearly flawless after that. Like I said, I lost 5K in the start, and I ended up racking up 10K with multiple wins, man. I had a phenomenal win rate today, and I did very, very well scalping puts, just puts, on an overall super bullish day. And I'm not saying that's the best thing to be doing, to go against the overall bigger picture of the trend. But I do believe there is opportunities where you can make money going against the overall bullish day. Because one thing you do have to remember is we're scalping. We're getting in and out within minutes. If we're aiming for a small move, what does it really matter if we're going against the trend in a sense? But you don't want to get caught up in against the trend. You have to do it very strategically. And it's not something I would recommend for people to focus on. At the end of the day, we truly want to focus on scalping with the trend. But what I'm saying is, even if it's a bullish trend day, there's going to be certain opportunities that just make common sense to do puts and don't make sense to do calls. Even though those calls will bank later, it just doesn't make sense because the risk to reward is there and it's just too high of a level. The main reason why I swayed away from calls is because it's just too high in price. I didn't want calls at this high in price. I didn't want to chase the bull trend. So instead of sitting on the sidelines, which is something I could have done, I strategically scalped, put options in and out several times, making 1K here, 2K here, multiple times. Very, very nice win rate on those puts. Very strategically at our 419 gap and our 420 resistance. If you watched our overall videos, we discussed how that 420 level would be the best level for puts because that was previous support that has not been retested. You could see right here, even in the pre-market, 419.90s, this is all previous support that has not been retested. It just sold off from this level. So when it spikes back up to this 419, 420 level, it's going to try to have a nice drop. And puts banked, man. Puts had a better risk to reward at 420 than they did buying calls at 420. So I would say in that sense that I went with the trend. Now that I explained to you that overall analysis, I'm going to recap some of the trades and recap some of the price actions. And one thing I want to make very, very clear, especially when it comes to callouts and just trading in general, I would say for the vast majority of the people watching, especially if you're not 100% professional or if you don't have six figures and you're not seeing great results and living off trading, I would just wait until at least 9:50 a.m. to day trade. I've noticed this week, so this week I barely had any losses. I had like three losses in total and several wins. It was over like 20 wins, but it was like 15, 20 wins, something like that. But anyways, I've noticed my biggest losses came from going in on the morning. And the reason why I believe that those bigger losses happened in the morning is because, first of all, there's lack of confirmation. The market is just opening up. There's lack of 30-minute candles. Anything can happen within a light switch. Second, it's extremely volatile. If something is extremely volatile, it can be extremely dangerous, especially if there is lack of confirmations. And there is typically a lot of flip-flops and a lot of chops at market open. Sometimes you're just going to get a strong crash or a strong rip out the gate, but then you'll see reversals around 10 a.m. That happens a lot. And then sometimes you'll just chop and it'll spike like crazy. You have to get like near perfect entries. So the reason why I would tell the vast majority of people to sway away from market open is because there's lack of confirmation and it's extremely volatile, which is dangerous. And if you're going to do it, you need to understand it's like FOMC meeting type of trading style in a sense. So with that crazy volatility, you want to balance out your portfolio and you want to make sure that you're sizing in smaller than you normally would, because due to the high volatility, your wins and losses are going to be greater than they normally would. So how do you balance that out? You take smaller position sizes and you get in and you get out very, very quickly. You don't hold with that high, crazy volatility, right? Now, if you wanted to hold something and you were bullish, you can just keep on holding until you get the first red candle. Then you just get out. And if you were bearish, you just keep on holding until you get the first green candle. Then you get out, right? With bullish first red candle. So with that being said, those are some more tips and tricks I can give you, because I've noticed this week my least accurate trades and my biggest losses came from directly at the open. And another reason why I think that is, I'm going to add this on as well in terms of the market open. If you're not the biggest early riser, you don't get up several hours before market open, you're going to be a little foggy. You're going to be a little bit, maybe like brain fatigued, possibly. You might not feel 100% your best if you're waking up not too early before the market open. You just jump right into it. You might not feel as sharp. And another thing that I've noticed in terms of me is I've noticed that I get jumpy. Sometimes I get a little bit jumpy at the market open and I just want to make a trade. I just want to get it over. This is another thing, man. I actually believe, now you can do this with like small stars. I actually believe if you participate in the market with certain trades and situations and you just get in, you get out, you just take your small losses or whatever, it's going to give you much better information trading on later in the day. Like I've always noticed that. I have very strong recoveries by losing at market open because it's going to give me a much better understanding on what I should be doing later on. But you don't have to participate and take those losses, but it just makes it more real if you do in a sense. But I wouldn't recommend that. But anyways, those are just some tips and tricks and some insights that I picked up. Now, let's discuss the 420 level. So if you watch the videos, like if you went back a couple videos, we've been discussing the best level for puts was the gap close reversal at 418.73. This was one of our higher gaps, 418.78. And we also said 420.10 if it doesn't work at that level. I played it at both levels and I banked multiple times and I hit hard and I banked a lot on that 420 level. I'm going to show you how I did that. But the way we came up with 418.73, this is previous support that has not been tested and there's a gap to fill. So when it fills the gap, it's going to try to have a reversal. Now, another way, and this was our best level, 420. I hit this one multiple times. The way we came up with the 420 level was because, like I said, 420 was a short-term support level that was just never retested, man. You could see right here, it had the support at 420. It retested and it crashed, right? But after that, it happened again and it just never retested. Right around here at this 419.80 and 420 and in the pre-market as well, it never retested. It just crashed from that level. So when it retests back to the first time to 420, they're going to try to crash it. Plus, it's weekly highs, man. It's the best resistance level you can possibly hit puts at. Even if I believe SPY is going to go higher, there's just certain levels where I'm just not going to do calls and not follow the trend. That's the reason why I swayed away from calls. Now, if you watched my last video, I told you guys, people were saying, well, why aren't you focused on trading the trend? Like I said, first of all, 420 to 419 is major resistance. So the trend is technically bearish, especially at 420. And second, I did want calls. I really did want to buy calls with the trend. The problem was it never hit my level. I like buying with the trend when I'm seeing overreactions. So what would be an overreaction? This right here, I mentioned this in my video, 416.30. This is previous resistance. See how when it broke above this resistance, it created a nice bear trap and it started breaking out? I would love to buy calls down there, but it never retested. But guess what? Another day will come and it will retest and I will look to buy calls at that level, man. I'm going to provide the best setups and the best levels, and they're not always going to hit that same day. They might hit later on and they are still relevant. You want to use confirmations though, but that 416 is very still relevant. But with that being said, like I try to position myself in the best trades I can possibly make. If puts aren't going to work in this situation and I'm stopped out and I don't want calls at these levels, even if it looks bullish or whatever it is, I just don't want calls. I'm just going to sit on the sidelines. Sometimes I'll try to chase the trend. Sometimes I'll sit on the sidelines. If I'm not chasing the trend and I'm not sitting on sidelines, I'm waiting for the best opportunities for reversals. That's what I'm doing. And 420 at the end of the day was just the best level that made sense for puts. It made no sense to buy calls at 420. It really didn't. Now, there was a time where it did make sense, but we didn't do it. We were all bullish on SPY. I was very bullish on SPY when this was in the 416s. That's why I cut my puts, but I didn't do calls because, like I said, it's about the price as well in certain confirmations and certain things. But we were, as a whole, we were very bullish on SPY when this 30-minute candlestick closed at 420 and we weren't doing puts again. And the reason why that is because this is a bullish hammer. This is a bullish pin on the 30-minute. It's going to try to spike after that, and then it started spiking. And then you have the bearish doji on the 30-minute, then it sells off. I hit puts at 3:45 p.m. We did not get caught in this bear trap when 420 reacted as support. We did not get caught in that. I hit puts at 3:45 p.m. at the exact peak when this was at $420.40. It sold off all the way to $419.80. People banked on that play. But in terms of before that, let's discuss before that, man. So I explained to you why we targeted puts at 420. And there was a phenomenal level. Like I said, even though this pushed higher and we weren't in puts when it pushed higher, we waited for the confirmation for the 30-minute bearish doji, and then we did puts at 3:45 p.m. as well because we know 3:45 p.m. is a key time where SPY likes to reverse. And another reason in terms of put options, so, there was plenty of confirmations to do puts at 420. If SPY is going to sell off from 419.80 all the way down to 418.20 from our best level and it's already working, if I'm seeing bearish confirmations on the retest, I'm doing puts. And that's what we were doing, man. We did it several times. I capitalized on that bearish downtrend on the retest of this 419.80. We kept on doing it. I'll show you some examples on like how you can capitalize off of that overall downtrend. We hit it at the top towards 419.80s, sold into the dip. Where's your previous support? Your previous support right here. See how there was support at this 419.85 level? So we were hitting puts at resistance. We sold into the dip. You have to understand, if you're doing puts on a bullish day, you have to sell into the dips. You cannot sell into the rips. You cannot try to time the bottom on where you're going to sell. You just have to get out because the day is bullish. The puts are going to get destroyed on the dips. That's why you have to sell as it's dipping and not try to predict the bottom. But anyways, that's like one thing you have to understand. Like literally the call is banked. Every single dip, for the most part, call is banked at the key levels. But anyways, you can see there's some support at 419.85. Our best level for puts is 420. We hit puts. SPY cracks the support. We sell the dip. We make our money. When it spikes, since it had such a nice drop, this was a very nice drop for puts, considering how badly they got wrecked. Like this is a nice drop overall. What you're going to want to do is when it spikes back up to the previous support at 419.85, we hit puts. As soon as it spiked to 419.80, I hit puts. I sold into the dip. Spike back to 490.80, hit puts again, sold into the dip. Spike back to 1490, and then right here, where's your new support? Your new support is at this 419.60 to 419.70. Spike back to 419.70, hit puts, sold the dip. That's how you take advantage of a little short-term reversal. When it cracks, we knew the exact top at 420, so we took advantage of that resistance. We sold the dip, and if it has a nice drop like this, you wait for it to retest back to where it was consolidating. It was consolidating at 419.80. This is where it got crushed as soon as it dropped below 419.80. So when it spikes back up, you hit puts, and it should react as a new lower high, react as resistance. Sell the dip. Hit puts again right here. I did all this. Hit puts again right here. Sold the dip. Hit puts again right here. Why right here? Because your previous consolidation and support level was at 60 and 70. See, it's lower now. It's not at 85. It's lower now because SPY is going lower. It's forming lower highs. That's why it's lower now. But the thing is, you don't want to keep on chasing this and doing this. You hit it a couple times and then you just call it, right? And you can use 30-minute confirmations as well to confirm if this is actually going to be bearish, right? What's a great 30-minute confirmation? What were more reasons why we're smashing puts? Look at this. It went from 419.80 all the way down to 418.28. And then once the 30-minute candle goes red, what do you think we're going to do at the top of the channel? We were smashing puts because this closed red, bearish on the 30-minute, and then we're selling into the dips. When it spikes back up, we hit puts again. You can't hold puts on a bullish day because the problem is it's going to get to a point where it stops dipping, and then that's where the buyers are going to spike it and the puts are going to get destroyed. There's no way to figure out where the exact bottom is on those puts. You just have to sell as it's dipping. You can maybe wait for one bullish green 1-minute candle. But in a sense, that's how I was able to do extremely well today by scalping. You could say even against the trend, but I would say with the trend because it was at weekly highs, right? I wasn't doing puts, at the lower levels. I was just waiting. But with that being said, man, I try to help Jim, man. Jim, he holds hopes. He's one of the best traders within the chat. He holds for very long periods of time. I explained to him, man, 30 minutes bullish, just sit on the sidelines, wait until the 419, 420 zone, just wait. He didn't listen, so he took a hit on that. But he'll be all right, man. Jim always recovers. Dude's an absolute beast, man. Jim is one of the best within the chat, man. I love Jim, and he's always looking out for the, for the Discord, for the channel, for the people in there. But anyways, that's my overall analysis. That's my overall view. And like I said, what I taught you and some of the things that I said is not 100% the best thing to be doing. In terms of the trend, I'm not always going to be trading with the trend. The reason for that is I either don't like the levels or I'm just wrong in terms of the trend. But if I'm wrong about the trend, I'm getting stopped out quickly. And if you're wrong about the trend, you're getting stopped out quickly, guess what? You're going to quickly figure out that, wow, I need to start changing and doing something different. I either need to trade against the trend at a better level, wait for confirmation, or I just need to go with the trend, right? But if you just studied it, man, every single dip was banking on calls. It's like a wake-up call. But it's also easier to recognize the trend as well if you wait a little bit. If you just wait a little bit for a trap to get set, for a trap to get created, it's a lot easier to identify if something's going to be bullish or bearish if you just wait instead of just getting in right off the bat, right off the rip. Market open is going to have a lot of emotions. You're going to, you might have a little brain fog. You might be very urgent to make a trade because you're excited to trade. You're excited for the market open. It's extremely volatile. There's lack of confirmations. There's lack of 30-minute candlesticks. There's lack of charts. It sucks, man. Market open is fucking difficult. It really does suck. Now, there are certain times in terms of the market open where it's great if it's just at the best level. Like the main time I would recommend for people to trade at market open, if it's just at the best level possible. Like if we opened up at like 420 or 419, then yeah, smash puts. It's like the best level possible. But if it's not those best prices, then just avoid it for the most part. That's what I would recommend people. Wait for the first 30-minute candle to close, or wait for a strong confirmation on maybe the 5-minute chart past 9:50 a.m. Give it at least 20, 30 minutes. So those are just recommendations that I can give you guys. So in terms of that pattern that I was interested in, it's no longer repeating itself. It's no longer working. With that being said, I'm going to have to find something and capture something new. What we do know is there's resistance at 420. I'm going to give you guys a very strong and very great update on the SPY, heading into Sunday. And then, of course, market open within Trader Society. But it's some things that I could say in advance. So we closed at 420.02. In terms of how we closed very. Oh, and this is another thing in terms of measuring the move. This is why I cut my puts as well. So if the pattern's not repeating itself, right? So this is the pattern. It was supposed to do this. It's supposed to go down. It's supposed to gap down. Previous closing price reacted to support. It gapped up. Pattern's not repeating itself. You stop out, you cut puts, or you just don't even do puts. There was literally no reason to do puts. I just jumped in. That's why I cut so quick. But it wasn't as quick as I wanted to because the market's so fucking volatile. So I had to eat that 5K loss on that 60 cent rip against me. But anyways, this is another thing called measuring the move. Right here, if SPY's gonna have this big green bullish day, it went from 408.64 to 413.72 on this nice green bullish day. If you were studying this daily candle right here, it was starting to look just like this daily candle. So if you do the math, that's a 5-point spike from the lows. What was the low? 415.25. So if history repeats itself, it's going to try to top 5 points above that, right around 420. That's another reason in terms of measuring the move why I felt puts was such a strong, brilliant idea. And we did very well in terms of the puts later on throughout the day. Like I said, I had my one scratch at market open, and then I just waited. I waited for the best levels. It wasn't easy in the beginning when I was trying puts at the 419 level, just chop, just sideways, nothing too special. But when we were hitting the 420s and I was catching that trend, like I said, I went in on it, man. I went in on puts here. I went in on puts here. I went in on puts here. We went in on puts here. We went in on this very, very nicely. Sold every single dip. I'm not holding a put, and I don't hold in general. But it makes no sense to hold a put for a long period of time on a bullish trend day because every single time it dips, they're going to spike it right back up to the previous support. That's why I'm buying puts at those previous support levels, and then I'm selling into the dip because it's going to try to spike back to previous support. And then eventually, since it's a bullish day, it's going to try to push higher. And then in terms of no reasons for puts, like I said, there's literally no reason for puts in terms of 420 again because bullish candle, look, bearish candle, retest, I'm doing puts. Bullish candle, retest, I'm not doing puts. Bearish doji, closest 30-minute bearish, I'm doing puts at 3:45 p.m. That was a phenomenal play. I sold it break. It sucked, man. As soon as I sold it, the thing crashed, man. But it's good though because members who were in on that, they held it a minute later than me and they banked on that. But anyways, man, yeah, we did puts at 3:45 p.m. That was such a good play, man. You guys could probably tell, like, I love puts. But like I said, man, it's just truly phenomenal to be in a situation where you're just not getting destroyed and caught in these traps and just holding hopes, man. I can't speak for everybody, but like I said, you see how fast within the chat I cut my losses. I was out at 416.10, and then I just sat on the sidelines, waited for better levels, and I tried to get Jim to cut, but he couldn't cut, man. So wait to trade the best steps for this prices. Respect the trend. Respect when you identify in a pattern in history that your confirmation is not playing out. What's a confirmation? Well, it needs to gap down. It needs to turn previous closing price to resistance. None of that happened. None of my levels for puts reacted as a resistance. 415. None of it reacted as resistance. It all reacted as support, and we gapped up. All bullish. No reason for puts. No confirmation. If you would just wait a little bit, you would have realized that fairly quickly. But I didn't wait out the bat, and I paid the price for wanting to get in with no confirmation, right? But I made it all back because I understand what it is I'm doing, and you have to cut your losses extremely quickly. You cannot hold your hopes against the trend. You cannot underestimate it levels. Even though 420 was the best level for puts, if we went to like 420.20 when I was in those puts, we never broke out when we were in the puts. Like I said, we did not do puts past this 30-minute bullish candle. We waited until 3:45 p.m. We waited for this to close bearish on the 30. Then we started hitting puts on that bearish doji, right? That's just what you have to understand, man. You got to wait to trade the best setups at the best prices. Use those confirmations. But yeah, that's my overall thoughts. That's my overall analysis. In terms of my update, that's going to be on Sunday. I can't say too much right now. We're going to be looking at, though, 422. 422, there's a gap to fill. Previous support, see if it reacts as a resistance. Stop at 422.70. We're going to be looking to do puts at 422. That's what we're going to be targeting with our stop at 422.70. I'm already interested in that. 420 is our new key level. We're going to see how it reacts. We are at weekly highs. We'll see how it reacts there. Not saying anything about that yet. 414.65 is our new level of interest for puts. 416.30 is a YOLO scalp for calls. 414.65, is our level for calls as well. And then new best level for calls is at the lower gap, 411.09, right? See the pattern? Look at the pattern, folks. It's going to happen again eventually. Look at this. See the pattern? It gaps up and then it goes back down, fills the gap. That's the bottom. Gaps up. Then it goes back down, fills the gap. That's the bottom. See how it's the same shape? It's like an upside down V. It's like an upside down V. Bottoms at the gap, bottoms at the gap. The tip, the pin, the tip, the pin. Well, when we get back down to the bottom of this gap at 411.30, guess who's hitting calls and guess who's swing trading with that confirmation if it happens? I am. Wait to trade the best setups at the best prices, man. The market is simple. You just need to wait. Wait for the plays to come to you. Wait for something very unusual to happen. Wait for bull and bear traps to get created. Wait for crazy overreactions. Wait for the craziest setups to hit. Like I said, it would have been crazy if we dropped to on a bullish day. It would have been crazy if we dropped down to 416.30. I could have played my calls, previous resistance reacts to support. That'll happen all the time. Today it didn't happen. So I didn't do the calls. But it's going to happen at some point, and then there's going to be days like this where it does happen. Unfortunately, there wasn't a massive overreaction downside to buy calls. There was some nice moves. There's very nice moves. The puts banked from 420. It dropped all the way down to 418.30. Then it formed higher support and it dropped to 419. But we wanted more of an overreaction to hit the calls. At such high levels, I want to see a nice drop to 416.30 to hit calls, and that's why I didn't do it. It's not always going to hit, and I'm not saying it was going to hit. I'm just saying if it hits, I'm getting in, right? We're not trying to predict that, it's going to 416.30. No, we're just saying if it goes to 416.30, we're smashing calls. If not, then we just got to wait for a 30-minute pattern or just sit on the sidelines or wait for an opportunity for puts or just find something else to capitalize on. But that would have been the best trade in my opinion. It just didn't hit. So with that being said, if you want to be part of Trader Society, it's going to be the first link down below in the description. Use this Memorial weekend to study the video lesson library within the chat, network and communicate with us within the Discord server. Give us feedback, ask us questions. We are all going to be within the Discord over the weekend, man. You guys have any questions, let us know. If you want to use this weekend to get ahead and study, it's the first link down below in the description. It's a one-time fee. It's lifetime access. You get access to the Discord. You get access to the moderators within the Discord. You get access to the network, the community. You get access to the video lesson library, the trading system, the gap trading system, the price action analysis. If you want to learn how to trade and read price action like me and the moderators within the chat, this is the best way to do it, is to be in the chat, is to participate in the live trading streams, participate in the live trading voice channels, watch the video lessons, watch the YouTube content as well, ask us questions. We are all there to help you guys out as we do have some spare time. With that being said, it's the first link down below in the description. Now is the time to invest into yourself. I will see you guys within the chat from here.